The S&P 500 was flat while Nasdaq lagged, but positive breadth and healthcare leadership kept the tape from breaking. Rates stayed central to the equity setup. The 10-year yield closed at 4.392% and was up 4.90% year-to-date, while the federal funds target range stood at 3.50% to 3.75%. That left Treasury pressure as the main macro constraint on a still resilient tape. July FOMC pricing kept policy risk in view, with a 31.0% hike probability and a 69.0% hold probability. The signal is not a full path forecast, but it keeps the next meeting squarely in the foreground. Was mixed. June S&P Global Manufacturing PI printed 55 versus 54.6 forecast, and Services PMI printed 51.3 versus 51.1 forecast. PCE inflation matched forecast at 3.4%, Q1 GDP beat at 2.1%, initial jobless claims came in at 250K, and new home sales weakened to 580K. For U.S. equities in the week ending 2026-25, the S&P 500 finished almost unchanged at negative 0.01%. The Nasdaq composite fell 0.46%, while the Dow Jones Industrial Average rose 0.14%. Under the surface, S&P 500 breadth was positive with 305 advancers versus 198 decliners. That participation kept the tape firmer than the Nasdaq-led weakness implied. So the index message was mixed, but the breadth message was not a breakdown. Sector leadership made the same point. Healthcare led at positive 1.57%, while consumer cyclical lagged at negative 1.38%. The board was split. Industrials, healthcare, energy, basic materials, real estate, and utilities were positive, while technology, financial services, communication services, consumer cyclical, and consumer defensive were negative. The drill down put healthcare strongest side detail in diagnostics and research, while the weakest side detail sat in consumer cyclical's apparel retail group. That contrast kept the leadership map narrow but clear. Healthcare strength offset consumer cyclical's weakness. The next macro watch is June 30 with Chicago PMI, CB consumer confidence, and Jalop's job openings. Each is still listed with a previous reading and no actual value yet. The earnings watch is also dated. Constellation Brands and Nike on 2026-6/30, Ferguson on 2026-6/07/06, and PepsiCo on 2026-07/09. The forward focus is simple. Confirm whether macro resilience can hold while rate risk stays visible. The key risk is still rates. The 10-year yield closed at 4.392% and was up 4.90% year-to-date, while July FOMC pricing showed a 31.0% hike probability. That is the pressure point against an otherwise mixed but resilient market rate. Breadth was positive, healthcare-led, and Nasdaq weakness did not pull the broader tape apart. The S&P 500 was flat while Nasdaq lagged, but positive breadth and healthcare leadership kept the tape from breaking.